Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 11th, 2025, and we're diving into the first quarter earnings report of JPMorgan Chase, a leading global financial services firm. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. JPMorgan Chase has just released their Q1 2025 earnings, and there's a lot to unpack, from their revenue performance to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. JPMorgan Chase reported a total net revenue of $45.31 billion for Q1 2025, which is a 6% increase from the previous quarter. John, can you elaborate on the factors driving this growth?
Absolutely. The increase in net revenue is primarily driven by strong performance in their principal transactions, which saw a 47% increase, and lending and deposit-related fees, which grew by 9%. Additionally, net interest income remained stable at $23.27 billion, reflecting effective interest rate management.
And what about profitability?
JPMorgan Chase's net income rose to $14.64 billion, a 5% increase from the previous quarter. This was supported by a pre-provision profit of $21.71 billion, indicating robust operational efficiency despite a 26% increase in provisions for credit losses.
EPS performance and analyst expectations. JPMorgan Chase reported an earnings per share of 5.07, surpassing the analyst forecast of $4.62. John, what does this EPS beat signify for the company?
This EPS beat is a strong indicator of JPMorgan Chase's ability to exceed market expectations. It reflects their effective cost management and revenue growth strategies. The fact that they outperformed the forecast by 45 cents per share is a testament to their operational strength and market positioning.
How many analysts were surveyed for this forecast?
9 analysts contributed to the EPS forecast, which highlights the broad consensus on JPMorgan's financial health and the surprise element of their performance.
Operational efficiencies and future outlook. JPMorgan Chase has also shown improvements in operational efficiencies. Their non-interest expense was reported at $23.60 billion. How does this impact their overall financial health?
The controlled increase in non-interest expenses, up by only 4%, alongside a return on equity of 18%, underscores JPMorgan's efficient cost management. Their ability to maintain a high ROE while increasing their book value per share to $119.24 is impressive.
And what about their future outlook?
With a 12% increase in cash dividends declared per share, JPMorgan Chase is signaling strong confidence in their future cash flows and profitability. This move is likely to attract more investors looking for stable returns.
Key takeaways. In summary, JPMorgan Chase has delivered a strong performance in Q1 2025 with significant revenue growth, an EPS beat, and a dividend increase. John, any final thoughts on their investment prospects?
JPMorgan Chase continues to demonstrate resilience and strategic foresight. Their strong financial metrics and shareholder-friendly policies make them an attractive investment, especially for those seeking stability in the financial sector.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on JPMorgan Chase's performance in the comments below.